Hey guys, how's it going? So it looks like Trump's tax plan has actually gone through. It's going to actually go through here, and this is huge. I mean, this is huge for corporations. More specifically, this is huge for big corporations, corporations that make a lot of money, and corporations that have a lot of money. Now, while there might be a lot of companies that fall under this umbrella, um, ones that come to mind are the ones that are most undervalued, in my opinion, that have the brightest future and the most cash. And when I think of that, I think about Apple, which is, like I've said to you guys before, quite frankly, I think you got to be out of your mind not to own Apple. It's just kind of a no brainer. So, how is this going to affect Apple? And just think companies like Apple. Well, this has been reported for a while here. Starting January 1st, 2018, this is what he's been talking about the whole time. It's going to drop the corporate tax rate from 35% to 21%. So that's a huge think about companies that make a lot of money, like Apple making $200 billion a quarter. What does that mean to that company? More money coming in, more money to do things with, to invest, and to pay back shareholders. It's gonna be a huge win-win for corporations, especially Apple. But when we actually talk about the money that Apple has overseas, and if you want to look at this right now, this is their last annual report. I believe it's around 271 billion. You could do the math, and yeah, that's right. That's billion. So we have long-term marketable securities, 194 billion. So that's just basically, guys, what they classify as being long-term. They have short-term marketable securities, and then when they say marketable securities, they mean stocks, essentially, right? It's just basically how they're classified a year. I believe it's a year or more. If it's more than a year, they're classified as long-term. And then they actually have 20 billion in cash as well. So you're looking at 270 some ish. You could do the math there. Billion. And before we were looking at, it was 35% to bring that back. So what Apple's been doing instead is they've been issuing debt, right? Because it's cheaper for them to issue debt bonds, and they make so much money that they can easily pay the interest and pay it off rather than bringing that money back. And that's big if that money comes back, right? There's a lot of things they could do with that. They could invest more in the United States, like they've actually done before. They did that with their Mac Pro. They even Foxconn opened up a little plant in states as well. So what it means now is they're no longer going to have to pay corporate tax rates on money that they claim to have earned abroad, which is huge. That's a huge portion of Apple's revenue now, right? So yes, it could encourage more income to be kept in foreign tax havens, and I do expect that that will occur still. But when companies have so much money overseas like Apple, I think a lot's going to come back. And as you see here, coming back is now between 8 and 15.5% rather than the current 35%. That's massive. That's huge. Personally, I really didn't think that this tax plan was going to go through, especially with these kind of tax cuts. Um, but it's going to be big. And you couple that with the fact of Apple services revenue growing massively. It's the size of a Fortune 100 company now. You're looking at also the iPhone X, which I'll stake my reputation on that is going to be it's going to be one of their best selling. Well, I think probably the best selling iPhone ever. And this is just going to be a slam dunk. So that's just my opinion anyway. But I thought you guys would be interested to know just basically how this tax plan, as it looks right now, affects corporations and affects the stocks that we're interested in. Anyway, it'll be interesting to see how this unfolds and to see how the market digests this information. And we'll be keeping an eye on this. Anyway, have a great day, guys. Talk to you later.